Hello, this is Charles Reed Anderson, filling in for Bernard Leung, and this is the Analyse Asia podcast, where we aim to dissect the pulse of business, technology, and media in Asia. In today's podcast, we're going to take a look at the venture capital scene in Asia and beyond, and we're lucky enough to be joined by Mr. Chua Kee Lock, CEO of Vertex Ventures Holdings and managing partner of Vertex Ventures, Southeast Asia and India. So Kee Lock, welcome to the show.
Thank you.
So before we delve into venture capital, why don't you tell us a bit about your background, yourself, how your career started, and how you eventually got into venture capital?
Well, I guess I got into venture capital somehow by luck. Never thought of myself somehow will end up with venture capitalist. Started off in 1985. I got a scholarship from a large company in Singapore called Net Steel. It's a large steel company at that time in this part of the world. They wanted to diversify their business and branch into technology, and decided to give some young people, at that time I'm young, to a scholarship to Stanford to do a master's degree in engineering. So I went there to do an engineering degree, and during my summertime, this same firm called Net Steel decided to start their own corporate venture arm, and with an office in Silicon Valley, Redwood City, at that time. And then so during my summer, I went up to intern for them for 3 months, and get excited about this whole industry and the venture capital activities. And after I graduated, came home for a short period of time, and they sent me back to Silicon Valley to work in their Silicon Valley office for almost about 3 to 4 years. And that was the beginning of the golden age of US Silicon Valley's technology venture capital. So you get to see all these so-called legends like Tony Sun of Van Rock, Don Valentine, Tyler Perkins at time, all these very legendary venture capitalists. You have a chance to sort of, as a young kid, sit in the room, watching how they assess and how they discuss issues. And then that was the beginning of my career in venture capital.
That's a pretty impressive story, because if you think about it, you were there at the heyday when it was first starting out. Yep. The things that we all read about in books, yes. You were actually on the ground at that time, yes. So that's quite exciting. So I imagine you must have gotten some life learnings or life lessons during that time. Did you ever pick up some words of wisdom from some of these people that you've applied throughout your career?
No, I think the commonality of all these great venture capitalists is I find that they all keep an open mind. They're all very knowledgeable what they're looking at. When they discuss topics of specific technology or sector, you can see that they clearly have spent time understanding the sector. So that's one thing that since then I always tell myself, if we are investing in the knowledge business, we must be always knowledgeable both in terms of the business, the technology, or the people, or whatever it is. Because you can't just give people a general comment and buy low, sell high kind of idea. You have to be more specific. And because after all, we're in the business of innovation and disruption. If whatever we are doing is new, people want some constructive idea. So that's something I learned from all these I guess great venture capitalists. Yeah.
Okay, very good. One part I really liked about that is you also mentioned the people side of it. Yeah. Sometimes it's very easy to do the technology side, yeah. And it's the people and the cultural change that can actually make it more complex or difficult to implement and impact the future success of those solutions.
Yeah, well, one of the reasons, as you probably know, one part of my career that which I went on, I took a few leaps. I went to start a company myself. Mm-hmm. I was an entrepreneur for a short period of time. In 1997 to 1999, myself and a couple of guys started a voice over IP company before Skype. Mm-hmm. We, in fact, were the Skype before the Skype, called Media Ring. The idea at that time was a dial-out modem. How do you allow people to make long-distance call use through PC to PC? I don't know where you're in Asia at the time. Asia, all the telecom players are monopoly. You'll be making a phone call from Singapore to USA is $2 per minute. Mm. It's crazy kind of rate. I mean, today, can you imagine the kind of price you're paying? If you talk for an hour, you probably go broke, right? But that was kind of monopoly situation. So when we saw the internet in 1995, a couple of us decided to come together to start a company. And the lesson learned at that point in time as an entrepreneur is that very interesting is all about people. VCs, of course, sit on the other side of this entrepreneurial story. You can better appreciate their struggle because you're working literally 24/7. And then you are every day trying to figure out where are the next challenges and how to solve the issues. And issues are coming up every hour. You need to prioritize them. And ultimately, it's down to the entrepreneur judgment. So one of the things that I also take away from my own experience is that so long the entrepreneur is doing his very best, and he's trying very hard to execute the plan, we must always be supportive and try to be helpful. not try to second guess what they're trying to do, because we are not living in their environment on the daily basis. So that's one thing, that people is important for us, for Vertex especially.
Okay, very good. Well, it's a good lead into Vertex. So why don't we look a little bit now about your current roles? So can you give the audience a bit of overview of what about Vertex Holdings does and how it relates to Temasek Holdings and what your current role involves?
Sure. Vertex actually, today and what Vertex used to be is quite different. So I need to maybe give a bit of history so that people get a bit of perspective. But some of the audience may have heard about Vertex 30 years ago, so they may have a certain perspective than today. So maybe perhaps let's go back to history a bit. We started off in 30 years ago, 1988. We are one of the longest operating venture firm in this part of the world. Originally as a corporate venture capital arm of a Singapore technology group, which is owned by Temasek. And the idea at the time was that Singapore is in developing. There's a lot of companies like Singapore Technology needs to go venture out to other countries to acquire technology through a corporate venture program. And that's why Vertex was established as a corporate venture arm. And did very well for a long period of time. Unfortunately, we hit the dot-com bubble in 2000, 2001. And like anything of corporate venture, once you hit a big patch, you first thing you go back to your core, which is the original ST engineering business, and you essentially hibernated the whole venture capital arm called Vertex. So Vertex was hibernated between 2001 to 2008, essentially doing nothing much, and was restructured and became a direct subsidiary of Temasek since that time. So for almost 8 years, we did nothing much because we were essentially in the hibernation mode. And somehow, interestingly, in 2008, Temasek relooked at this whole venture capital scene and decided that they need to somehow get involved in the startup scene, and decided to restart Vertex. And that's how I came in, because they somehow knew about me, perhaps because they think that I'm a bit of a risk taker. So they came and talked to me and decided that we should restart Vertex. And I joined in late 2008, just before Lehman Brothers. In fact, I still remember the conversation I had with one of the senior person, and she asked me, why do I think that this is the right time to start a venture capital fund? I told her that venture capital is one thing that is what I find is consistent. There's a cycle. And when the cycle is up, this way you should start a fund, not when you're down. And she said, oh, isn't that a bit risky? I said, no, when it's up, it was going to come down. So when you start the fund, roughly around then, when it comes down, you will be the only one with the real money and pick up all the company that invest at a decent valuation. And that fund will make a lot of money. And turns out that I did not plan on the Lehman Brothers. September 2008, Lehman Brothers happens, and then the whole market will collapse. And we just started our new Vertex fund with 100% capital from Temasek. That was 2008. And 2012, Temasek gave us a ton of money again. That was also the second fund that we started. But what is different today from that time, 2008, is that we transformed in 2014 under the leadership of some of the senior management in Temasek. They want us to take this further, how to transform this to truly to be a sustainable institution, that we don't have to rely on a single investor called Temasek. So in 2014, 2015, what we did is we transformed ourselves to a platform whereby Temasek no longer give 100% capital. They will give between 30 to perhaps 50% of capital. The remaining capital, each individual partnership had to go and raise externally. So meaning, today we have Vertex Venture Israel, Vertex Venture USA, Vertex Venture China, Vertex Venture Southeast Asia India, Vertex Venture Growth Fund, and Vertex Healthcare Fund. These 6 partnerships, they have about 30 to 50% capital from Temasek as an LP. The remaining money is raised by the GP themselves, and the GP also themselves to put their own capital at risk. And this is a more typical LP GP structure of the venture capital. And in my view, it's a more sustainable business, because previously, after we restarted, to me, it's a very risky structure, because it's a single point of failure, which is me. I'm the so-called managing partner of the whole group. Everybody is, of course, working very hard. Together we collaborative and we build consensus. But ultimately, still boils down to one person, single person's judgment. And that's a very risky model for venture capital. So when 2014, I saw the opportunity to transform the company. We agreed to create this so-called standard LPGP structure. And today, this is what we are. So essentially, Temasek today is a major anchor investor of the group, and the rest of the partnership below are separately organized. This is why you saw my titles. I'm also managing partner of Southeast Asia and India, and then I'm not managing partner of any other funds, because those other funds are independently managed. Now, last point is the Vertex Holding. So Vertex Holding now today is a holding structure. So it holds the money that funded through all these separate partnership below. But in order for us to differentiate and to be able to create a better long-term value, we also create some resources at the Vertex Holding level. And this is why you see two of my colleagues here. So they help in many of social media's engagement. Cheryl helps a lot of the PR activities on that regards. And so these are the resources we build on the Vertex Holding level that we try to help some of the partnerships team to take the brand further than beyond just single country or single market interest to be a truly global player. So ultimately our goal is that we believe venture capital is a local business. You need a local connection, local connectivity, local capability, but it also is a global business. You can't possibly invest in the best deal in Singapore, but you know that this technology is not good enough to compete against the global player eventually. So therefore, we believe that this is a correct model. You connected each other through a global platform, but each of the partnerships are separately organized and incentivized to make sure they pick the best deal, but they are still aware of the global opportunity and the competition.
Okay, that sounds very good. It also sounds like it must be quite challenging to oversee that on a day-to-day basis. So can you give us an idea? What is a typical day for you?
Well, actually, each of the funds are independently managed. So at Vertex Holdings, as my role as CEO, it doesn't really do much thing other than making sure that we are continuing keeping the brand up there. And that's more the holding level activities. But for me, day to day, I spend a bit more time in Southeast Asia and India fund as a managing partner, spend time with the portfolio, spend time with the managing partner or the younger partners, looking at the portfolio, talking about the thing, joining the board. So typical things for me is, I start early, usually 7 a.m., I will get in, quiet time, nobody sort of, disturb me, so can read all the necessary stuff, and, like anybody else, we read all the possible articles in social media, follow some of the tweet, and figure out what things people are talking about globally. And then 9 o'clock, everybody start coming in. There'll be meeting after meetings like this, and then the rest of the day will be just meetings after and discussion.
Okay, so it keeps you quite busy from 7 a.m. through the course of the day.
Yes.
Okay. Doesn't it make everybody nervous that you're in before them for a couple of hours? Does that mean they arrive and they have 20 emails from you waiting at their desk already?
I think sometimes they get nervous about it, but it's okay. I mean, some of them will discover that this is what I do, and then if they need something important to discuss, they'll come in early. So sometimes 7:30, and then we have a discussion first, because nobody is around. So, because once everybody's in, there's a lot of discussions start happening, and then you'll be running in between meetings, running between calls. So a lot of times the rest of the day, you won't have time to spend time talking about issues. Yeah.
So what I also found interesting is that you have some of your funds are vertically focused, and then some of them also look at more countries or regions. So I found you have health tech in there you're mentioning, and then some of them are more Southeast Asia and India. Is this going to be like a strategy you think that makes sense going forward? Is it we find something really interesting in healthcare, so we're going to back that? And then what stages do you actually get involved with these funds? Is it early stage, mid stage, late stage?
No, I think generally for us, information technology or TMT sector is more country or regional focus. So that's why we have Vertex Ventures Israel, Vertex Ventures USA, Vertex Ventures China, or Vertex Ventures Southeast Asia. These are primarily focused on IT sector. The healthcare is more global in nature because we discovered is healthcare is one of those sectors whereby it's difficult to have a technology to invest. It's only for a single market. Let's say Japan. Eventually, you will have to get the product out from the market to globally address. So when you invest in a technology, a healthcare sector which is only for single market, it will never really work because eventually competition will sort of kills you. So healthcare is global in nature. And the last one is growth fund. Growth fund by nature is you have to be looking for the best growth opportunity, but not single country focus.
Okay, very good. Now, when you start looking at things to invest in, are there any certain traits or attributes that you look for in the startups or maybe in the founders?
I guess there are a couple of key things. The first important thing is trying to understand where is the business and where is the disruption, where is the innovation. So that's the very first thing we're always trying to get our hands around. So when the founder comes out with a new idea and everything, we're trying to understand what are they trying to solve here. So that's the first thing, start with the idea. So the idea, is it really compelling, or the idea is just one of those Me Too, the 10,000 other guys are doing the same thing. So that's the first thing that we do. Then second thing is idea can be good, solution must be very compelling. How big is the market? Because if the market is only about $10 million large, that's not good enough, right? It can be 100% of the market is only $10 million worth. So how large is this thing you're trying to solve? So there's total addressable market. Last but not least is, of course, you mentioned as founder. People is very important for us because ultimately it's all about execution. Because market will change, technology will change, competition will change. So we will have to have a bunch of people who are always willing to adapt and learn and somehow move with time. And I think this is very important. In fact, I always tell the entrepreneur, which I'm on the board of, I say, look, if you are truly in a business that is very disruptive and innovative, none of us have seen it before, including you and me. But you have to always keep an open mind, and you must also listen carefully to some of the suggestions that we are saying. Not that all are right, not all are wrong, but some of them are probably perhaps applicable. So there's some things that we find that one of the very important traits for the entrepreneurs, they must be willing to listen. Not they have to follow. Listening and following instructions are two different things. You can listen to everything we say. You can take none of them, which is fine, so long you have a good reason to do it. But if you don't refuse to listen to any of the things, that's a problem. And that's something that we always tell them. You must keep an open mind. You must listen carefully. And then ultimately, everything we say is rubbish, so be it. But if 50% of things we say is useful, you must deal with it.
I think that's a very interesting perspective, because if you think about it, it'd be great if it was just a linear process where I come up with an idea and I'm going to become a unicorn. It isn't. There's constant changes, there's market dynamics, there's black swans that can come in, technology innovations that impact it. So I think it's a very good piece of information. I think always think about that, keep an open mind on these. Yeah. And the other part that you mentioned that I really like is it's got to start with what problem does it solve. Yeah. There is quite a few that come out now, and it's technology for technology's sake. We're connecting something because we can, not because it delivers business value or solves a business problem. Yep. So I think I like those 2 points on that one. Yeah. Okay, so let's take a little bit of a deeper dive into your portfolio. Sure. What are the ones that you see out there right now in your portfolio where you're investing that you think are really interesting? It doesn't have to be the biggest. It could just be something you find interesting because of the technology, its potential impact on business or society.
Yeah, I think a couple of them. I mean, I'm sure you know that we are the initial investor of Grab, so we're still very proud of the company, although we sold a lot of the shares, but we're still very proud about how truly it had transformed and solved the transportation issue in Singapore. I'm sure you live in here,
That's how I got here this morning.
Yeah, 5 years ago, it's just completely disaster. All of us want to call a cab, we call a number, we will wait for half an hour, and then nothing showed up. And we trying to hail a cab on the road, they will tell you that they're having night shift or day shift, whatever shift they're on. It's impossible to get a cab. But fast forward today, this is not an issue anymore in this part of the world. So this is very, for us, it's very rewarding. Know that we truly invest in a company who solve a pain points for everybody, and that's something that we've done. We're still very proud of Grab. So looking ahead, some of our younger portfolio in this part of the world, Southeast Asia, I guess a couple of them. One of them is Delicious in India. We invest in this company doing online, offline, fresh meat, grocery, e-commerce company with the growing middle class in India. People want access to a hygienic product, fresh meat. And then gone are the days people buy those, meat or food that, probably are contaminated. So people want to have access to that. So in order to do this, you must have a much better e-commerce system whereby you integrate the offline supplier with online system. So this is a company which I think growing very well, now about 6 to 7 cities and growing at a very rapid rate. Another company that in Singapore, which started out by a couple of more experienced guys, is a company called Validus. This is a so-called small medium enterprise marketplace lending platform. This part of the world, Southeast Asia, 60% of economies are small and medium enterprise. SME never able to borrow money from the bank, even though they are decent industries. And because the fact is, very simply, SME by nature are small. And because they are small, they probably are not so sophisticated in their financial reporting system. And in certain markets, they are not required to even submit audited financial. So as a result of this, when you go to borrow money from the bank, unless you mortgage your whole house and your whole, whatever you own, they're not going to lend you a single dime. So a lot of SMEs in this part of the world are not able to get capital to grow their business. So what Validus is trying to solve is trying to apply the machine learning AI technology using data as a basis. And how do I be able to assess a company without necessarily looking at only financial loan? How do I assess, let's say, a paint supplier of a shipyard company? How do I know this major supplier of paint to the shipyard is a good SME? I'm not basis on this because you probably maybe supply maximum $30,000, $40,000 per month to them. That's not a lot of money. But they need working capital because when you commit to a project, you need to buy the stuff beforehand. So these are the things that I think Validus is able to do this. So they now become number one in Singapore, with a huge volume. And then they just grew into Indonesia recently, and they're just about to start Vietnam very soon. And next year, first quarter, they will start in Thailand. And gradually they'll start a few other Southeast Asia countries, and the goal is to become the largest SME lending marketplace in this part of the world. So that's the second company. Last company I guess I mentioned is this company called InstaRim. They will be rebranded soon. They started off by a couple of interesting gentlemen. Originally, the idea was very much, I guess, copying the idea of TransferWise in UK. The idea is very simply that if you want to send money from London to Croatia, started by a bunch of Croatians for TransferWise, there's no need to send money across the banking network, because while you're sending money from London to Croatia, there'll be somebody trying to send money from Croatia to London. If there's a way for you to efficiently net off this money locally, the monies are being delivered without cross the so-called banking network in some sense. So they took this idea and then implemented in emerging market, because they believe emerging markets requirements even more, because emerging markets similarly needs to have this access of this cross-border payment across the remittance. So they built up the network. Now they have over 55, 56 countries, mostly emerging countries. Of course, they also access to US and Europe and so on and so forth. And they grew very rapidly. Now they are on a run rate of $3 billion US annualized run rate, remittance volume, and then growing very fast. I mean, the founder is targeting to achieve 5 billion at the end of the year. And I think this will make us the largest in this part of the world.
Well, some exciting companies there. So the next question is, if you look at the market right now, especially in Southeast Asia, we've seen an influx of capital coming in. Every VC has an office here, which means while people, yes, they always need funding, it becomes even more competitive for you as well. So when you go out and talk to portfolio companies or potential companies you'd like to invest in, how do you sell Vertex? So what are your key differentiators that you bring to the table, whether it's your network or your contacts across the industry?
I think a couple of things. I think first thing is that generally what we tell entrepreneurs to talk to our entrepreneurs. So that's one thing we find is very efficient. The entrepreneurs we have worked with, they have the best understanding of what is our culture, how's our behavior as investors after we invested. So generally when we try to work with some entrepreneur, we will ask them to talk to some of our existing portfolio and have a one-to-one conversation and come back to tell us what they think about us. And generally, that is the best way for us to access whether or not truly we deliver the value. So generally, the entrepreneur that we have, they always point out a few things that we do very well. First, that we contribute a lot to their so-called business development. We will open doors. This part of the world is usually not difficult for us. Maximum 2 degrees of separation. You want to know Mr. X, we may not know Mr. X, but we'll know Mr. Y who know Mr. X, then we'll get to Mr. X quite quickly. But most of the time, we have 1 degree of separation. We know the person directly. We will be able to open the door quite quickly. And that helps because a lot of times, entrepreneurs trying to build a business, you don't want to start from the lowest possible rank and work way up to the top level decision maker. You want to start from the top, and your product is good, then they ought to justify the entry. So one part that a lot of entrepreneurs always say is we are very good in opening doors and the business development activities. Second part that we are very good is we also very good in helping entrepreneurs to build talent. Because we ultimately believe it is ultimately a people business. You can have a great CEO, great CTO, and whatever it is, you need to have a team, right? So sometimes they will have gaps. And because, like it or not, we are in the business of people business, we know a lot of people. And we also have a full-time recruiter in-house, and it will help these recruitments. So a lot of our entrepreneurs in initial days, they always maximize this capability from us. In fact, Grab, in the initial days, we always see Anthony in our office very regularly because he was interviewing people, deciding a lot of hiring initially. And that's something that we do quite well, and we try to help the entrepreneur to find the right candidates, and then ultimately it's their decision. They decide who they want, and then we find the best possible candidate for them, and then he or she will decide on that second. The third is probably also the most important part of it, and it's a fundraising. In order to build a business, you need to raise a lot of money, and that part of business is always important. So we always help the entrepreneur in some sense, either by opening the right doors or making the right call or making the right referral, or sometimes fine-tune their pitch. Because sometimes, the entrepreneurs, they know the business so well, and they just forgot that, investors look at things very differently, and you need to keep some points specific to their so-called focus so that they understand what you're trying to get at. Otherwise, you were lost in the whole analysis. So these are some of the things that we do quite a bit for entrepreneurs.
Okay, very good. Now, when you oversee Southeast Asia and India, that's a pretty massive market because you're looking at close to 2 billion people across those countries. Yeah. So it's quite a large area. And also, it's at varying degrees of technology proficiency. So some of them are very well advanced, some of them are just catching up. How do you even break that down? I mean, where do you think some of the more interesting investment opportunities are? Or what challenges do you face? And can you give us some insights into this broad region that you cover?
So for us, we actually have a lot of people. We have about 12 of us. So now we are adding more, so we probably get to 15, 16 very quickly. First of all, you need to have a lot of local capabilities to find the right companies and the network and to find the right deal. So this is a first starting point. The second part is because we have a lot of us, we tend to divide ourselves into the different focus. So some people focus only on social media related activities, some people only focus on commerce related activities, some fintech or enterprise, whatever that is. So each of us somehow gravitate towards a sector of interest, and we try to read up and try to be knowledgeable in that industries and be able to know which are the most important deals in that sector. So that's something we do quite well. In each of the market, we generally know what are the so-called interesting ideas that are coming out. And the next thing is then ultimately is to pick the right one. Because if the idea is of any good, there ought to be a couple of more guys trying to do the same thing. So ultimately you will have 4 or 5 ideas that you can pick from. And it boils down to people, boils down to the technology they're trying to build and how they're approaching it. And of course the entrepreneur plays a key role in that decision ultimately.
Well, there's a lot of opportunities. I mean, any challenges you see? I mean, do you see, like, is it government regulation? Is it a skill shortage? I think there was an article I saw this morning saying that in Vietnam, they have demand for 350,000 IT workers, and they are actually going to have a shortfall of about 70 to 90,000. So is there any challenges you see that will maybe limit some of the opportunities in the near term, or things that we should be looking to address to make sure it's successful 3 to 5 years from now?
Yeah, of course, in this part of the world, you mentioned the part about regulation. That's always a concern for us. And I think generally Southeast Asia, the past, and India, the past couple of years, they have been quite entrepreneurial or startup friendly. So therefore, I think most countries and regions have been not overly regulated in the short term. But this is always a concern because in order for us to be successful, we need to have a country whereby the regulations are not excessive. So today, I think we are fine, but never know. This part of the world are very paternalistic in nature. The government generally wants to do the right thing for the people, but sometimes they overdo it, and then when they overdo it, tend to over-regulate. So that's always a challenge in our view, and so that's something we always have to be mindful of it. But in terms of talent, I think this is something that is unavoidable in any industries whereby when there's a growth that's very, very fast. You're always short of talent in terms of basic skills, short of talent in terms of more advanced skills. I even, take the example of Grab. When we were scaling up very quickly we discovered that knowledge that we know that we have built over here is limiting our growth. And eventually, Anthony had to go overseas and to find people who have this skill set, who have built a large system, who know how to build systems that can scale indefinitely. So those are the things that you have to acquire from other markets. But when you reach the size, of course you can afford to do that eventually. So when initially there'll be some more basic skill that's lacking, and that everybody's competing for that basic skill. And then eventually when the company is scaling much bigger, you will have to compete against Google, compete with Amazon for the much advanced technology and skills. And that is a different playing field.
It's interesting you bring that up because I was just at an event where there was 4 VCs from Silicon Valley speaking in Taipei. And what they were all saying is how there's a skill shortage in Silicon Valley. You can get a really bad engineer, but it's still going to cost you $400,000.
Yep.
So what they've already been doing is going to Austin, going to Chicago, going to Boston to try and branch out. And they're running out of ideas. And what a lot of them are saying is they're going to start looking more at Asia as where to find this now, because you can get high quality engineers, good English proficiency at a much lower rate. So I think it's funny that we're talking about a developing market out here where we're saying, there's a skill shortage. The people in Silicon Valley, they're clamoring out saying, we've got a skill shortage. We can't find it as well.
I think Silicon Valley is slightly different because Silicon Valley by nature has always have shortage. But I think the past couple of years, they're compounded by immigration policy. So that has forced a lot of good skilled people not able to get the correct immigration visa. And a lot of these guys are coming back to Southeast Asia or China. And we are getting that benefit. Some of these very skilled people are coming back not because of anything else. Somehow they cannot get a visa, they're returning. So I think the Silicon Valley problems are more serious, I think. In this part of the world, of course, we always have this problem. Nevertheless, we are getting the benefit of the so-called US immigration policy. And if this continues, I think Silicon Valley is going to be a lot more challenging going forward.
What's also exciting is they might not come back initially because of the opportunity, but as these markets grow, especially what we saw with China, people are coming back and making a lot of money there. And I think India could be one of those next ones where it's going to be ready to skyrocket, because you're looking at over 1 billion population, plenty of room for improvement, because there's a lot of problems that need to be solved, like you were mentioning with one of your investment companies there.
Yeah. No, I think if you remember in 1980s, I don't know, we were active in Asia, the four dragons, right? Taiwan, Korea, Singapore, and Hong Kong, I think the four dragons, right? Of which Taiwan and Korea are the one who benefiting for the so-called the returnees. So that time was the semiconductor time, and a lot of the semiconductor initiatives in Silicon Valleys are the Koreans and the Taiwanese who went to the US to study. And then when their own home market was booming, they all returned home to start their own Silicon Valley equivalent. And those countries, as all accelerated initially. And China, even in 2000, when initial phase of China developments, a lot of Chinese were returning to China to be so-called returnees. And they used to have this terminology for them, calling them the sea turtle, right? But because in Chinese it sound the same, essentially meaning returnees back to China. And then initially, China started a company, Baidu, all these are all returnees. The returnees were coming back. So I think the returnees wave is important to drive a lot of innovation, because they have the benefit of developed countries seeing how advanced country develops and technology. When they return to a country who are emerging, they are able to adopt this one faster, and then they bring the technology curve up faster.
I do spend a lot of time in Seoul and in Taipei, and you see a lot more of them now, especially in everything related to venture capital. So now let's take a look at something else. Like, what we hear a lot in the press is that there's a lack of exits in India and Southeast Asia. Do you think that deters the market opportunity for venture capital to thrive, or is it just a matter of time? Is it more of a maturing thing?
Yeah, I think today this is a problem. There's not a lot of real exit. So a lot of people have a mark-to-market of what we call total portfolio values. So that is short-term. I think there's a concern for investors because in the short term, unless you can create exit, ultimately, you can give me a portfolio value of $1 billion, but then paper money is useless. You need to translate that to a real cash return. So I think that short term, this is a concern. In this part of the world, there's no yet to have a lot of consistent, proven exit story yet. But I think it's going to start off over time. But ultimately, the exit market is not here. The exit market is still Nasdaq, New York, and Hong Kong. This is still the natural market for everybody. I think people is not going to consider Singapore market or Indonesia market or India market as the exit market for IT or healthcare company. You still have to go to the more bigger and sophisticated market to get the correct value for your company. So I think this is a concern, but I think over time this will solve itself when companies find value and build over time. Yeah.
But what we also see is there is a lot of people starting funds here and throwing money into Southeast Asia. So do you think there's any risk of maybe overheating the market where there's too much dry powder, there's just overinvestment, and therefore the value of a single idea goes up from $1 million to $3 million to $4 million?
No, I think clearly today there's a bit of hype going on in this part of the world because everybody, and I like the investors, the global investors are looking for better return. They are aware of US, competitions and talent shortage. They are aware of the China short-term challenges. The trade war are putting some damper to their whole industries. So now they have to look for alternative, right? Alternative is clearly now back to Southeast Asia, India. So a lot of people are here. You're right. The competition is quite fierce. But I always tell my younger colleagues that you must remember this is a long-term business. We must always invest in the correct value, not low value, correct value. Because we have to recognize that entrepreneurs, always view the business to be a lot more valuable than us. That's a given. If the entrepreneur doesn't view this business more valuable than what we think it is, something wrong with the entrepreneur. Because if we think the company is worth 10 million, the guy's telling his company is worth 5, something's really wrong with the entrepreneur, right? So, but if the guys think it's 20 million, that's okay. The point is ultimately is how to get him to understand that, what is the fair value that both sides can accept. And that's something that we always trying to encourage, entrepreneurs to look at it and not trying to say that we're not trying to invest cheap. I always tell them, I'm not trying to take advantage of you. In fact, we always try to make sure that we don't dilute entrepreneurs too fast. We always trying to make sure that they hold a meaningful stake in the company. And sometimes many of our companies, we even force the board to issue a lot of options to the key entrepreneur, at every round. We had one VC came and tell us, this is very strange. We say, why is this strange? To us, it's ultimately about people business, right? If these guys are key people, why should I be diluting them so fast? And what's the problem of letting them, making sure that they become hugely rewarded for their success? And then in between, we are riding with them. What's wrong with that? Okay, we get diluted 10% more. not going to make a lot of difference. I mean, instead of making $200 million, you make $180 million. Is that a lot of difference? I mean, to me, it's not a lot of difference. But if you do not have their incentive properly aligned, you may not make the $180 million. You make zero. People tend to compare that $20 million, forget about actually it's comparing $180 million to zero. So when we have this kind of issues, we're trying to talk to the point and get them to understand it. Yeah.
Okay, very good. Final question on venture capital. How do you think it's going to evolve? There's a lot of crazy things going on in the world right now. What do you think over the next few years for venture capital and maybe venture capital in Singapore and Southeast Asia?
I think the Southeast Asia and Singapore especially, I think the things is a lot much better. You know, I'm sure you know about now it's 2019, about 10 years ago, 2010, you look at the Southeast Asia venture capital, it's less than 100 million, 150 million US in total venture capital activities. I think last year it's about 7 billion or 7.5 billion US. So it's hugely improved, right? So I think the trend is correct. You know, there are a lot more ideas, a lot more things are happening. But however, I think we're going to hit some speed bump because we have been all up for 9 years. I think at some point in time, you know, some people is going to realize that somehow the valuation is excessive, whichever that is. Some of the companies going to run out of paid rooms. They're going to not able to raise money and then much higher valuation. We're going to hit some speed bump, and then people is going to lose confidence. So a lot of this kind of so-called short-term players is going to run away. But for us, Vertex, we're a long-term player. So good time, bad time, we always be here. So we think that what is ahead of us is, if we look ahead 5-10 years, it's going to be very exciting for us. But in the short term, we see that it's going to be a bit of speed bump, a bit of headwinds. We're going to have some bit of challenges, which is good. In any industries, I always believe, if any industry worth doing, there had to be competition. There had to be a bit of bubble, and then there had to be a bit of down cycle. If there's no volatility in the industry, there's no point to bother, right? But so long the volatility is on the trend up, we are fine. If the volatility is on trend down, then we're in trouble, right? So I think for us, we are in the next couple of years is on a trend upwards, and there's going to be some volatility, and then we just have to ride through the volatility and become, survive this whole cycle.
And in the scheme of things, if you look at it, when there is challenges, it also creates opportunities on the other side. Yep. If there is headwinds coming and there's going to be a downturn in the economy, then solutions that actually focus more on cost savings versus driving new markets might be safer bets. So there is always the opposite side. For every challenge, there's opportunities that will be generated out of it.
Yep.
Okay, so now, on a personal note, can you recommend a book or movie or podcast that's recently had an impact on either your business or personal life?
No, I think there's a book by Ray Dalio. He wrote a book called Principles. I think that book is very interesting, especially in the business that we are in. I was quite intrigued at how he always think out of the box, how he's always try to stay ahead again, think differently and do things differently, and that's why he was so successful over time. Then one more book that I read many years ago, which I always tell the people who want to be a venture capitalist, I always ask them to read this book called Start With Why. I thought it was a very interesting book because he went to examine some of the great companies and how they have failed. And I thought that was very interesting because, a lot of startup companies, when they started off, the entrepreneurs have a reason and why they're doing it. Eventually, why become what and what become how. And then eventually they forgot the why. And they will become just a company they want to do, to make products and understand it. So if you look at all this, many of the companies in the that we are familiar with today are essentially evolve themselves from a why to a how company, and eventually they will lose it and they will become just nobody. So that's what this is the second book that the people should read. Yeah.
That'll be a good one for a lot of the startups who are listening because they have to make sure they always remember their why and don't ever forget about it.
Yep.
Okay, so finally, how can the audience find you or Vertex Holdings? What is their social media sites or website?
Yeah, there's a website. You can go to vertexventures.com, Southeast Asia, India, or go to Vertex Holdings. Also, they can find my email address. Yeah.
Okay. Kee Lock, thank you very much for your time today. It's been an absolute pleasure. This has been Charles Reed Anderson, and this is the Analyse Asia podcast. See you next time.